This is the Asia Trade. I'm Paul Allen at the Citi Australia and New Zealand Investment Conference here in Sydney.
And I'm Annabelle Droulers in Hong Kong. The top stories this hour. Japan's political turmoil set to hit stocks as markets reopen, but Wall Street notching its best day since May on renewed optimism about US-China trade talks. Hot chips, Samsung's quarterly profit smashing expectations on memory demand. Broadcom soaring as it seals the latest blockbuster deal with OpenAI. Also ahead, President Trump calls for a lasting Middle East peace after Hamas frees the surviving Israeli hostages. And at Citi's Australia-New Zealand Investment Conference, we speak exclusively with CEO Mark Woodruff and influential macro strategist James Aitken. Let's take a look at how markets are setting up this Tuesday morning here in Asia, and you can see there is some positivity across the screen as we get underway. We did have some renewed optimism we just heard there in the headlines, but essentially the Treasury Secretary Scott Bessent saying that he still expects President Trump and Xi to meet. So that was something that certainly buoyed trading activity. In terms of the market to watch, it will really be Japan in the session, though, because we have seen futures indicating a further drop. You do see them there fairly steady right now, but it really has been not just the trade tensions and that catch down trade since they were shut Monday, but also what's happening with domestic politics and the collapse of the nation's ruling coalition. Australian markets have just come online here today. You can see them just fractionally higher so far. Data to watch as well. RBA meeting minutes is among the highlights. But let's shift on and take a look at what's happening in Korea today, because we just had the Samsung earnings coming out and we actually saw the biggest quarterly profit going back 3 years. So it does really tell us that demand for memory chips is still very strong. AI development hinges on this in part, so it is developing globally, we know, but operating profit coming in at 12.1 trillion won in the September quarter. Revenue as well climbing to 86 trillion won. In the pre-market session, you can already see that stock climbing more than 2%. Samsung, of course, really looking to position itself. We are seeing it making headway in HBM in particular. But let's shift on, take a look at the Wall Street session, because here tech was really one of the very dominant themes. We saw very strong gains in the NASDAQ, for instance, again up more than 2%. The SOX index as well climbing at 5%. But Broadcom was very much the main focus for us, and we saw that stock really gaining off the back of a deal with OpenAI. They're going to be supplying custom chips, networking equipment as well, and that's going to be a multi-year deal. The S&P 500, though, we saw that notching a 1.6% climb, so it was its best showing since May of this year. Chinese stocks as well. We saw those US-listed ones, of course, but rallying, even though we do actually have a call out from Morgan Stanley's Michael Wilson saying if these trade tensions do persist, the S&P 500 is at risk of an 11% drop. But, of course, Paul, something else that played into the sentiment was President Trump's trip to the Middle East.
Yeah, absolutely. And the president urging world leaders to ensure the US brokered truce between Israel and Hamas does turn into a lasting peace. At a summit on Gaza's future, Trump said efforts to fund the Strip's reconstruction have already begun.
Pleased to announce that numerous countries of great wealth and power and dignity have come forward to me and just today and over the last week to say they want to help in the reconstruction of Gaza, putting up whatever money is necessary. And the money is, of course, it's a lot of money, but it's not much compared to the value or the wealth of these tremendous countries.
Let's bring in Bloomberg senior editor now, Derek Rawbank. And Derek, I think it's fair to say the prevailing emotion right now is probably still one of relief. But there's a lot of challenges remain, don't there? And already we've got Israel accusing Hamas of violating commitments around the release of the remains of some of the deceased hostages. So what are the chances of this peace enduring?
Well, Paul, that's exactly right. Look, anything that you've gotten so far, it hasn't come easy, right? But you could fairly say that now comes the harder part, right? The very first step of Donald Trump's plan, and I think indeed most plans for a peace between Israel and Hamas, or something that could enable the rebuilding of Gaza in a sort of more stable situation there. The very first step has been the return of hostages who were taken in the October 7th attacks. That has broadly happened. All of the living ones have been returned. And so that's step one. Now you get to everything else. What does the rebuilding look like? What does any sort of accountability process, if there is any on both sides, what does that look like? What does a durable peace look like with several G7 nations having recognized a Palestinian state? What is the future there? There are so many questions that need to be answered here.
What about President Trump's role in this? He's obviously really trying to project himself as the key linchpin, I guess you could say, or the key peacemaker in this. Is that the sort of assessment we can take away from it?
Well, Belle, I certainly read a lot of Trump's remarks in Egypt as a bit of a victory lap, right? You know, even so far as to needle, a world leader from Norway saying, what happened, Norway? Making a sort of light of not winning the Nobel Peace Prize that he had campaigned pretty extensively for. But look, this is a president who sees this as a defining moment for his second term.
That was our Bloomberg senior editor there, Derek Wallbank. Thanks for joining us. And the other big story we're tracking today is U.S. Treasury Secretary Scott Bessent saying he still expects Presidents Trump and Xi to meet at this month's APEC summit in Korea. That comes despite China's move to tighten exports of rare earths and Trump's threat of 100% additional tariffs on Chinese imports. Bessent told Fox Business that all options are open for retaliating against China's decision and that the U.S. will not let Beijing's export restrictions stand. Let's get more on this now. Bring in Heidi Crebo-Rediker, senior fellow at the Council of Foreign Relations. She previously served in the Obama administration as the State Department's first chief economist. So, Heidi, thanks very much for your time this morning. Let's start there with that meeting. Do you expect to see it going ahead?
So first, thanks for inviting me to join the show. I think that I do on balance. And that's because all parties see that it's time to take the temperature down. The question is, does Trump have to de-escalate before that happens? So far, the reason the market response today has been so good is that Trump's mood music has been warm respect for President Xi. And Secretary Bessent has been working behind the scenes and then has this upcoming week in Washington pull aside a lot of his counterparts and leaders to figure out how they can coordinate to actually de-escalate U.S.-China escalation. And actually, the rare earths they were global in nature, and they had a great deal of extraterritoriality associated with them. So we do need to have some cooperation with our allies on tackling this.
Who do you think needs each other more, or who needs the meeting more? We've been discussing about how China this time around is looking a lot more confident, and Washington maybe is sort of struggling as well to come to grips with that.
Yeah, well, I mean, China has a huge amount of leverage, and what they did was ramp up and use that the dependency that not only the U.S. and our multi-layered supply chains have on a whole variety of the full down, upstream, midstream, and downstream of Chinese rare earths. And China does dominate, particularly in the heavy rare earths and magnets. So it's very clear that this was China playing a very big card. It's also clear that the escalation happened quickly, but very substantially, which kind of showed the world that China already had these ready to go. So it really, I think it was a true signal that China has been preparing for this moment to actually wage this escalation.
Well, we saw some export data out of China yesterday, Heidi, and it illustrated that exports grew the fastest in more than 6 months, or about 6 months. Steep declines to the US, obviously, were offset by gains to other markets. So how do you see China's relationship with non-US trading partners evolving over the next few months?
So it'll be interesting to see. A lot of the exports that used to come to the U.S. have obviously gone to not only to Europe and to other parts of developed Asia, but really widespread to the developing world, and really are a lot of displacement of the indigenous manufacturing capacity in a lot of countries. So I think the ricochet effect of having the re-export of goods to other countries, very good for China, because they are obviously showing that they're able to sustain the tariff war with the United States. But at the same time, I think there are serious implications for the relationships with other countries, and this will play out very strongly in the trade space over the coming months ahead.
All right, Heidi Crebo-Rediker, Senior Fellow at the Council on Foreign Relations. Thanks so much for joining us. All right, we are watching very closely at the moment events in Boca Chica. We are standing by for the test flight 11 of SpaceX's Starship rocket, so stand by for that. We'll bring you those live pictures of that planned launch when we get them. Stay with us. This is Bloomberg.
Well, with a key test flight today, SpaceX is working to advance development of its Starship rocket. This comes as the company faces doubts that the spaceship will be ready for transport or to transport NASA astronauts to the moon as soon as 2027. Let's bring in Bloomberg managing editor Shery Banjo. And Shery, just talk us through the context of this launch. Why is it so critical for SpaceX and to Elon Musk, as you just said there? I mean, it is facing criticisms about its capabilities already.
Yes, this is the 11th test flight. They've done a number of these. Some of them have worked out better than others. He had a string of pretty bad luck there. A number of tests that did not work out so well. The last one did all right. But essentially the criticism is that the company is behind this goal of getting astronauts back to the moon for 2027.
So what's on the slate today for Flight 11 in terms of things that are being tested, and what are the benchmarks for success or failure today?
Yeah, so we want to see if the company is able to reuse parts of it, parts of Starship. Eventually, they want to be able to reuse the entire thing. Today, we're looking to see if they hit some of those targets, if it, sort of achieves the landing that they want, and even if it happens at all. What happens from time to time is that it does get delayed because of weather or other things, and so we've had previous instances where there were, multiple day delays for the launches.
So as we just said, we know the goal is that NASA and SpaceX want to be able to land astronauts on the moon with Starship as early as 2027, but I mean, you just detailed some. There's still a lot of different technologies that need to be proven and brought into the Starship as well. So what is the ability of Starship to meet the deadline of 2027 at this point, do you think?
Yeah, I mean, it's still a little far off, and it's hard to bet against someone like Elon Musk. But from what we've been hearing so far is that the timeline has been, stretched a little bit, that, they're not sure that they're going to reach that timeline. And what you have now is also, complicating other factors, is the government shutdown in the U.S., which isn't impacting SpaceX in particular, but it is going to, impact NASA and their ability to work with these companies. And so, we're really looking to see if Starship is able to, follow this test flight, and then looking ahead to, the next version 3 that they're going to launch with the next test, and to see. It's sort of like each little milestone gets it to that spot.
All right, Bloomberg managing editor Shery Banjo there as we await test flight 11 of Starship. Meanwhile, the bulls are back in charge on Wall Street as the US and China signal a willingness to keep trade negotiations alive. Joining us now for the latest market action is Garfield Reynolds, who leads NLive coverage in Asia. Garfield, have we just witnessed the taco trade in action again? Escalate a trade dispute and then walk it back. The markets really seem to like this.
Well, yeah, Paul, to some extent, although I think it's worth noting that yesterday's rally in US equities took them a little bit more than half of the way back up from the lows that were hit on Friday in the immediate aftermath of Trump's 100% China tariffs. So there's still some way to go before you can call the all clear on this issue. After all, it's mostly been the US that has been signaling a strong interest in finding a way towards trade peace. China has been less clearly interested in walking away from its done. There's certainly no sign that it's particularly interested in erasing Xi Jinping's so-called red line when it comes to rare earth curves. So there's optimism out there for equities, but it's still somewhat cautious. I think it's also worth noting that gold, I know we're used to this, it made another record, but it also made that record with its biggest one-day gain since June. So if you've got gold rising like that, it's a little bit hard to say that risk sentiment is in a particularly good place.
On the earnings front, and we can get to big banks in a moment, but we just had Samsung, for instance, in the last half hour or so, very strong numbers. In fact, the strongest we've seen going back to 2022. We saw Broadcom rallying really strongly overnight on this new deal with OpenAI. So that AI chips theme still seems to be maybe one of the major market drivers and not going away anytime soon. Yeah,
that's on the one hand, that is definitely not going away. And in fact, we were also in Asia, of course, looking forward to TSMC's earnings on Thursday, which a lot of the indications are that will be another strong result. And that will underscore the theme that if there's one thing you can rely on in the stock markets at the moment, it is AI demand and therefore the spending on AI infrastructure. So for the short term, at least, that's a very key driver for equities. There is the concern that this rally continues to be very narrowly based, and if you get a misstep in AI, that is going to bring the whole edifice tumbling down. That being said, for the moment, the fundamentals for the AI space still look pretty strong and still look like they can carry that weight for the rest of the market.
Garfield, thanks so much for joining us this morning. That was Garfield Reynolds there, who leads our MLive coverage in Asia, and we'll have more ahead on the Asia trade. This is Bloomberg. We're taking you to some live pictures here from SpaceX's Starbase site in South Texas. We are awaiting for SpaceX to launch Flight 11 of its Starship mega rocket tonight. This is the biggest, the most powerful rocket ever built. Now, what this ship consists of, or Starship consists of, is a first-stage booster called Super Heavy, an upper-stage spacecraft known as Starship, or SHIP for short. But, Paul, I mean, all of these components are designed to be reusable, and that's really critical here, because what SpaceX needs to be able to test is the ability for Starship to be rapidly reusable, and then that is what really helps it achieve its longer-term objective, which is taking people to Mars.
Yeah, that's right. We're going to see a few aspects of that reusability today. That lower section that you mentioned, the booster, is being reused from Flight 8, so that's the second time this booster is being used. It's not going to be caught today. We're not going to see that spectacular catch maneuver with the chopstick arms of the tower. That booster is just going to splash down into the Gulf of America, or Mexico, whichever you prefer to call it. But the upper section will then do a partial orbit of the Earth, as we've become accustomed to, and splash down in the Indian Ocean as well. Now, a few tiles have been removed. The intention is to stress test vulnerable areas of that ship as it re-enters the Earth's atmosphere. There's no backup ablative layer either, so they're really, once again, going to be pushing the limits of what the ship can do to find out where those limits are, Belle.
Yeah, that's right, Paul. And in terms of the flight path, I mean, you just sort of outlined some of it there, but it is important to say, let's listen into the countdown, though.
We have liftoff. Go Super Heavy. Go Starship. Thanks for all the historic flights, Bad One.
Vehicles pitching downrange. Booster Raptor chamber pressure nominal.
Booster and ship nominal power and telemetry.
All right, we are about 45 seconds into flight. We're still getting the rattle here at Star Factory. We are seeing 33 out of 33 Raptor engines lit on Super Heavy as it arcs across the Gulf. Coming up next on Max Q.
Okay, you're just seeing SpaceX's Starship there lifting off for its 11th test flight. This is going to be a really powerful test of its capabilities. The flight path of this ship is expected to look a lot like Flight 10 if all goes according to plan, but that most recent launch, it took place at the end of August. The Super Heavy steered itself down to a splashdown in the Gulf of Mexico about 6.5 minutes or 6.5 minutes after liftoff. The ship did the same in the Indian Ocean roughly an hour later. So that's the path we're expecting this to take today. As we were saying there, Paul, it is going to be a really important test of its capabilities, stress testing its capabilities, and really looking at that overall goal, which is to be able to take people to the moon by 2027. That is the goal in the shorter term. Elon Musk's longer term vision, though, is taking Starship to Mars.
And you can see there as the ship heads away from the pad, all 33 Raptor engines lit, as the commentary said there. And we're seeing an aspect of reusability there as well. 24 of the Raptor engines have been used on previous flights as well. So this is really helping immensely with SpaceX's goal of reducing the cost to orbit per ton. Right now, a trip on the Falcon 9, if you have a payload there, $2,700 per kilogram. The intention is for Starship to reduce that to $200 per kilogram and massively increase the amount of payload that can be taken to orbit up to 100 tons and beyond. And just for comparison, for those of you who remember the old space shuttle days, the price to orbit there, $54,000 per kilogram. So already SpaceX enjoying quite a lot of success in bringing down the cost to orbit, but not done yet. If this enormous rocket can succeed, that's going to make accessing space a lot easier.
Yeah, and that is what's really key as well, Paul, because you need to bring down these launch costs to be able to make space essentially more accessible. It is interesting to note as well just some of the challenges that we know SpaceX has faced. There's been a concern that essentially it wouldn't be able to meet, or it won't be able to meet, this deadline to ferry people to Mars by 2027. That has been one of the key concerns. But also we've seen, essentially a lot of promise around SpaceX as well. We know how reliant NASA is on SpaceX to carry out its objectives there as well.
Yeah, that's right. SpaceX key to landing or returning astronauts to the moon, as you were discussing, or we were discussing with Shery a short time ago. The intention is to achieve that by 2027, but there's still a lot of steps remaining before that is achieved, not the least of which is the complex ship-to-ship refueling while in orbit. But you see there we've had successful stage separation as well. The booster now on its way back to Earth. SpaceX also trying a new landing burn configuration here as well. well, igniting 13 engines at the start of the burn and then transitioning to a new configuration with 5 engines running. But that booster being reused from Flight 8. They won't catch it today. It's just going to end its life down in the ocean as that splashes down. Let's get back to Shery Banjo now, who's also watching this launch with us, Bloomberg managing editor. Shery, Bell was just mentioning there the importance of SpaceX in terms of returning astronauts to the moon in partnership with NASA. How are we looking in terms of the trajectory towards that goal? Is it realistic, 2027?
Yeah, I mean, the big picture here is that the U.S. and China have been both, reignited in this fight to get to the moon again first. And so the U.S. is really counting on SpaceX to do this. And Elon Musk has made some pretty lofty promises. We are, not sure if we're going to get there yet. I mean, this was a pretty important, or this continues to be a pretty important test today, because if they can replicate what happened last time, and that's really what this test is about, stress testing, getting back to replication as to, yes, we can do this. So if they can replicate what they did last time, then we can sort of move on to the next test here, the next version that they're launching, and then continue, as you mentioned, to saying, can we work toward getting to a spacecraft that can refuel, on its way. And so, each test is important in its own right, but this one, to be able to replicate the success of the last test is what we're looking for now.
And so how does that also set us up then for the overall goal and that deadline of 2027, do you think, if today's test is successful?
It's sort of really difficult to say as to whether or not they're going to hit the ultimate deadline of 2027. They also didn't set like a time or a date. It's like a sort of a general time frame there of 2027. But, it's certainly a good sign if they do hit this test today.
And just as you're speaking there, Shery, we can see the booster reigniting its engines and just hovering now above the waters of the Gulf of America, the Gulf of Mexico, depending on your political persuasion. But so far, so good in terms of the booster. But that will end its life there at the bottom of the ocean. No attempt to recatch that booster today. So the upper stage, meanwhile, continues to make its way into orbit. Shery, what are the test parameters for today's, what are the intentions around the upper stage today?
Yeah, I mean, you can see folks cheering on the live screen there. They're clearly happy about where it's going and where it's ended up today. And I think that the key today is just sort of showing that they can do this again. They're going to soon move into version 3 of the spacecraft, and a number of things are going to change. But if they can sort of replicate the success of last time, they can say that that wasn't a one-off, even though we did have a number of fiery mishaps over the last 3 times before that. The last success can be replicated with this successful one.
Shery, thanks so much for joining us there. That was our Bloomberg managing editor, Shery Banjo, and we'll have more ahead on the Asia trade. This is Bloomberg. You're watching the Asia trade this morning, and we are taking a look at how Aussie assets are faring about 30 minutes into the session so far. The ASX 200 is actually flat, and that's kind of surprising because overnight it was really this buy the dip mentality that was taking hold, and investors really liking these signs that Presidents Trump and Xi will meet on the sidelines of the APEC meeting in Korea later this month. But doesn't seem to be translating too much into the Aussie session so far, that optimism. Aussie dollar, meanwhile, it's looking very steady, but we are looking ahead as well to the RBA meeting minutes that are due, Paul, in the next hour.
And investors, fund managers and business leaders are gathering here in Sydney for the Citi Australia and New Zealand Conference annual event. 1,000 people in attendance this morning. And we're going to start our coverage with the bank's Australia and New Zealand CEO, Mark Woodruff, joining us exclusively. So, Mark, thanks so much for joining us today. As you gather this year, what is uppermost in people's minds? What are the key you expect to be dealing with today?
Paul, thank you for joining us once again. It's nice to be back. I think global macro is dominant, and that's not unexpected given the events of not only the last year but even the last week. And then key thematics from a sector perspective would be AI. Obviously, once again we have very strong interest in real estate across both commercial and residential real estate sectors, and I'd say the consumer. And the outlook for the Australian consumer is also of interest.
Yeah, I want to pick up on a couple of those points, and I'll just start with the AI one that you mentioned. In terms of what Citi is doing with its adoption of AI tools, what are you looking at in this space? Yeah,
we've rolled out AI tools across the organisation, and it's been an interesting sort of journey for us. But also if we look at it from a client perspective, whether it be through banking, but also in how it impacts the economy. So our global equity strategists have put out a recent report on how the impact of AI is feeding through into markets, through the economy, and through individual companies. So there's much to assess, but I certainly know from personal experience that my efficiency has improved since the rollout of those tools.
Yeah, there's some very useful tools in the suite for sure. You also mentioned the macro instability and uncertainty and volatility that we've seen. Against that backdrop, where is Citi seeing opportunities in Australia and New Zealand?
Yeah, well, we're actually quite positive about Australia. We've recently upgraded our growth forecast for Australian GDP. We've seen the RBA ease interest rates 3 times this year. We only expect one more rate cut, and I think there's a risk around that in terms of they might be done for this part of the cycle. What we've seen is a pickup in the consumer, and relating to my previous comment. And in terms of growth forecasts, and why we've uplifted that growth forecast, is finally we're starting to see a shift from public side driven growth to the private side driven growth. And that's something certainly the Australian government would be pleased with, but also means it's a more sustainable footing for that growth. And so we're quite optimistic about the Australian economy, and in turn we'd see a number of opportunities through the business.
Yeah, that's something the Treasurer Jim Chalmers has talked about before, is that a lot of the growth we've seen has really just been courtesy of government spending. But he also speaks a lot about his concerns around productivity in Australia. What are you seeing on that front, and are you optimistic that could improve?
Look, it's been the most talked about topic in the domestic economy this year, and obviously following the roundtable, there's been some announcements, but we're probably expecting further follow through. I think what's going to be interesting is how much can the technology in the Australian economy improve productivity. If we look at the US, what we're seeing is that sales growth is increasing, even though employment growth is not. That gives you an indication that the forward-looking productivity landscape is actually quite positive. That should feed through also to different parts of the Australian economy. But productivity reform, clearly it's on the Treasurer's agenda. We would love to see some really concrete steps in that direction.
So you mentioned you are optimistic, and you spoke about optimism around the consumer as well. But how much of that optimism is due to central bank easing, and how much of it is due to genuine reform?
Well, I think clearly the 3 rate cuts have helped. In fact, I think people may have underestimated how much impact 3 rate cuts might have had, and since then we've seen some winding back of the expectations of further rate cut easing. So I think it also comes at a time when aggregate fiscal expenditure still remains high, and so we've got quite a strong fiscal impulse. We've got a strong monetary impulse, and if you compare that to, say, over the other side of the Tasman to New Zealand, whereby we've seen a very aggressive easing of monetary policy, but the fiscal policy remains tight, you can see that when both work in unison, you can see pretty substantial improvements in growth.
Typically, when we see a rate-cutting cycle in Australia, though, we very rapidly afterwards see another spike in house prices. Is that something you anticipate this time around? And does that suck the energy out of the economy in other areas?
No, not necessarily. I think we've already seen a pickup in housing prices, and the demand for CEOs from real estate firms here at this conference today sort of reinforces the fact that it's not only feeding through to residential housing prices, it's also sort of helping feed through to commercial real estate, which is also a very strong thematic of the conference. Does it suck the juice out of other parts of the economy? No, I don't necessarily think so. The consumer pickup that we've spoken about a couple of times illustrates that. So we think that we're getting close to neutral. I think it was a tight monetary policy. We're moving towards neutral. Given the amount of fiscal impulse and the natural sort of pickup in the economy, we don't necessarily think that we need to go to easy monetary policy, but we think it's reasonably well balanced at the moment, and certainly we welcome that private sector pickup.
In terms of some of the macro disruptions that you mentioned, we're seeing a reignition of the trade dispute between China and US, with rare earths at the centre of it. Now, Anthony Albanese is going to meet President Trump next week, and we are anticipating some sort of agreement around rare earths, of which Australia has significant reserves. Is this an area that you're excited about for Australia?
I think Australia, look, the thing about when we've thought about tariffs for Australia, I think it's important when we think about the tariff implementation in a relative sense. And Australia has always been on, let's call it the more positive side of the tariff implementations in terms of lower tariff levels. But what I would also say is globally, and this comes out in our macro sessions here at the conference, is that the global economy has been remarkably resilient in the face of increasing tariffs over the last 12 months. In fact, global trade is higher this year than what it was previously last year, and global growth is relatively steady in the last 12 months despite all the disruption. So we would say that there's a general global economic theme of resilience. In the local market, I think there's absolute opportunities from a geopolitical perspective and also from a trade perspective for the Prime Minister when he's in Washington next week. So we'll watch that closely.
I've got a few business-specific questions for you as well, mainly around pension funds in Australia, also looking more and more for FX hedging capabilities. Is that a business that's growing for you at the moment?
It's been growing for a long time. It's a clear opportunity for us, but it's also a clear challenge for the superannuation funds, and we spend a lot of time with them working on different hedging strategies and also liquidity strategies around that program. The proportional dollar from Australian superannuation funds is going into offshore markets. And that requires more thought around, one, the hedging strategies, but also the liquidity requirements of that fund.
How about the prospects for equity capital markets and equity block trading business? What are you looking at there?
Yeah, I think look, still the IPO markets and the equity capital markets in Australia, we could do with more activity. That they have been relatively nascent. However, the M&A cycle has been relatively strong, and our participation in some key transactions around that in the last 12 months has been a real positive. I think, given where equity valuations are, we would expect that activity to improve into 2026.
Of course, last year you had a bit of an issue with the block trade around the Goodman saga. What were the takeaways and the lessons from that going forward?
Oh, look, I think we're well and truly moved on. In fact, last week, we completed, a significant block trade here in Australia. So, look, we're always we're always looking for opportunities to improve, but at the same time, well-established, highly credentialed people leading that business at present, and so we look forward to more activity in that sector.
I think next year you're celebrating your 100th anniversary here in Australia as the city heads into its second century here. What are you most excited about?
Yeah, well, thank you for mentioning it. Yeah, so 2026, 100 years for Citi in Australia. Look, I think every part of our business is in growth mode. So our services business, whether it be on the payments side or whether that be on the custody side, our banking businesses, we've got new leadership in that banking business, which is really performing strongly. And then global markets, given the global backdrop, sees plenty of opportunities. So we're excited to partner with our clients. 100 years, it's a real feather in our cap.
All right, terrific stuff. Mark Woodruff, CEO of Citi Australia and New Zealand. Thanks so much for joining us. And we've got more exclusive interviews coming up from Citi's Australia and New Zealand conference. So stand by for these conversations. In a few minutes, we're going to be talking market strategy with Aitken Advisors James Aitken. And later, the Lowy Institute discusses the outlook for Australia's foreign policy. Bell.
Thanks, Paul. Yeah, great interview there. Well, we are just getting some lines as well crossing because we have President Trump back on Air Force One making his return to the States. But it has been a trip for President Trump, essentially a victory lap of sorts, but going and travelling to Israel to celebrate the release of the remaining Hamas hostages, or living hostages being held by Hamas after that ceasefire agreement was brokered. So you can see here President Trump in Egypt, but he did also speak on Monday at the Knesset, which is the Israeli parliament. And during that speech, he used some of his time to lobby for the Israeli Prime Minister Benjamin Netanyahu to receive a pardon. There is an ongoing corruption trial. He did say, President Trump just now on Air Force One, that he thought it was good timing to bring up a Netanyahu pardon. He's also spoken about how he can't answer for how long peace will hold for the next president, but he does as well, has shifted back to talk of what's happening domestically in the US. He's asking for US governors to be stronger and tougher on crime, saying he could use the Insurrection Act if he wanted to, and that also he speaks to Speaker Johnson and Thune all the time. So these are just some of the headlines that are dropping so far from Trump speaking with reporters on Air Force One. We'll bring you more context on that as it comes to hand. More details ahead. This is the Asia Trade.
Let's take you back to orbit now. We are watching the progress of Starship Test Flight 11, and there you can see the payload bay of the upper section and the deployment of dummy Starlink satellites. Now, this is going to be an important function of Starship once it's up and running, because it's massively increased payload bay over the Falcon 9. It means it's going to be able to deploy Starlink satellites at a much more rapid rate, and next generation Starlink satellites as well. So this is a very important feature. That door there at the side, known as the PEZ dispenser, we saw that in action during Flight 10, which was the first successful deployment of those dummy Starlink satellites. So that appears to be progressing as intended as well. So we'll keep you updated on the progress of the upper section of Test Flight 11 as it makes its way around the Earth. Bell.
Yeah, and Paul, you can see here, clearly people are really happy with how this launch has gone this morning. But let's also shift back to big earnings, because it's been quite a busy morning for news. But less than an hour ago, we had Samsung posting its biggest quarterly profit in more than 3 years. So it does tell us about that demand for memory chip demand while AI development accelerates globally. But you're taking a look at how Samsung, SK Hynix are performing in pre-market activity this morning. Samsung, you can see, up 1.6%. But just recapping some of the big numbers. So we saw operating profit of 12.1 trillion won. It's around $8.5 billion in the September quarter. That's far ahead of what analysts had been expecting for 9.7 trillion won, and revenue as coming in at 86 trillion won as well. So this is the prelim figures. We'll get that full divisional breakdown and the net income as well, importantly, later this month. But it certainly does sort of lead into that confidence. We've seen a real race between Samsung and SK Hynix on HBM in particular, but now analysts are starting to think that Samsung has the ability to catch up to SK Hynix in this space as well. And we've seen a very steep rally in Samsung share price over the course of this year, up around 60% so far in 2025, or since early June rather, but also close to doubling the share price from from last year's low rather. So that's the headline we have there. As we said, Samsung sales coming in the biggest quarterly profit we've seen in more than 3 years for the company.
You've seen a strong run-up in the share price as well, Bell. It's been a fairly good year for Samsung Electronics. I mean, I'm just trying to calculate the percentage here, but it's a near doubling of the price on year. So it's been a spectacular year for Samsung Electronics, and this latest set of results are only likely to make analysts more optimistic on the path ahead. Let's talk about Japan now as well. The Japanese markets poised for a turbulent open after a 3-day weekend, of course, following the collapse of the nation's ruling coalition and another flare-up in US-China trade tensions. So let's get a preview now from Japan stocks reporter Alice French. Alice, how are we expecting markets to react to the news over the weekend, and what an eventful weekend it was?
It has been very eventful, and yeah, look, I mean, futures are pointing to a fall this morning, and this is obviously after the pretty decent rally that we saw last week off of Takaichi's win, obviously in the LDP leadership election. Look, I mean, this, Komeito leaving the ruling coalition is obviously going to be a blow to the LDP, and it obviously does just bring up more worries of domestic political instability. We know that stocks had a pretty decent rise last week on sort of hopes of this pro-stimulus approach from Takaichi, but it's now kind of up in the air as to whether she will actually be able to become prime minister. So obviously a lot of uncertainty. I think risk appetite is really going to take a hit today, and I think that will play out mostly in equities. It'll be interesting to see how it also gets reflected in the bond market too when that opens.
So which sectors do you think are going to be impacted most? Because it seems like political uncertainty is really going to be at the forefront of traders' minds.
Absolutely. I mean, I think we can expect the sectors that particularly gained last week to do kind of worse today. So we know that things like tech and defense did very well last week on these kind of expectations of more government spending. So they may get a hit. Obviously, of course, we do have these worries about US-China as well. That's likely to play out in exporters. I wouldn't be surprised if we see a dip there too. Having said that, banks didn't have a great week last week, because we know that, Takaichi is slightly less positive on those sort of BOJ rate hikes. And so we may see banks having a small recovery today, but I think overall, the mood is going to be a negative one, and we may see that play out sort of across the whole market and all sectors.
In terms of the whole market and all sectors, what could the new political landscape mean for JGBs?
Yeah, it's a tricky one, right? I think that bonds today will be really interesting to watch. Of course, it may be that JGBs kind of benefit from that kind of lower risk sentiment and that people kind of flee there for cover. But at the same time, obviously, with this kind of fiscal outlook looking even more uncertain, I think it will be difficult for investors to kind of go all in on those Japanese government bonds. And we may see them under pressure as well. It seems like a lot of traders are expecting a kind of negative day for the JGBs. We may see the yields up again. Obviously, we know over the world that there are worries about these kind of increased fiscal spending and kind of policy uncertainty, not least in the US. And I think that Japan will sort of feel some of that today as well.
What do you think longer term, since the tenure of Takaichi looks very uncertain, and as you said before, really investors had been reacting to that sort of idea of Takaichi-onomics, rather not Abenomics, but Takaichi-led. What do you think then that the longer term outlook is for Japanese equities or markets in general?
Yeah, I mean, I will say overall, we're still hearing a lot of positivity on Japanese stocks. We've got things like corporate governance. We've obviously still got a weak yen going on. And I think there is still quite a lot of positivity kind of heading towards the year end. In the immediate future, obviously, investors will be watching like a hawk that prime ministerial vote that we're expecting very soon. And we do have a BOJ policy meeting coming up at the end of the month. Now, it may be, of course, the domestic political jitters kind of make it harder for the BOJ to make a move. We know that we've also got Trump probably in town soon, so we'll see how that goes. But yeah, it's going to be an interesting few weeks for sure.
Yeah, absolutely. There's certainly a lot of different things to be keeping an eye on. Well, that was our Japan stocks reporter Alice French there joining us. We'll have more ahead. This is Bloomberg. This is the Asia trade, and we're counting down to Asia's major market opens. We've got Japan very much in focus at the start of trade here because we've been closed, of course, for a long weekend. In that time, we've seen the coalition between the LDP Komeito party collapsing. How are we going to see equities responding today?
Absolutely, Belle, and all the trade upheaval, not to mention either, although President Trump telling everybody to relax about that is going to be fine. Also going to be watching Samsung, though, closely at the open. Those third quarter preliminary results, a lot to be cheerful about there.
Yeah, very strong, and I think it's going to be really important to track, especially off the back of Broadcom. We saw that deal with OpenAI in the session, and really that AI theme was in play. But let's take a look at how Japan markets are coming back after what's been an extended break this morning. As we said, it's been huge political fireworks domestically because we saw Komeito, that's had a long-standing partnership with the ruling LDP, backing away from that on Friday. And so in the session today, it's going to be investors that are really rethinking Takaichi's ability to cling on to power. Can she stay at the helm of the LDP? Are we going to see snap elections being called? These are all some of the questions. And importantly as well, what does it mean for BOJ policy moving forward? Because we had seen traders very much expecting that we could see a move as soon as October of this month, even though Takaichi herself and economic advisors close to her seem to be a bit cooler on that idea. The Japanese yen, you can still see there holding around that 152 mark and watching yields that are just retreating slightly in the middle of the curve, but the 10-year yield there in focus as well. So we see the Nikkei there coming online about more than 1% to the downside. Let's shift on and take a look at what's happening in Korea as well, because that focus today is, as you said, it's been Samsung's figures. We can see the stock here is rising, but pretty modestly actually so far. It's an interesting story as well, because as we were saying, it was that big trading activity we saw overnight. The Nasdaq, for instance, climbing more than 2%. But we did see that deal signed between Broadcom, OpenAI. It's a multi-year partnership to provide equipment, other supplies as well. But Samsung, as we said, biggest profit going back to 2022. That's on an operating profit basis. We'll get the full breakdown later this month, but it does tell us that Samsung, that race with SK Hynix on HBM in particular, we could still be seeing that playing out, and traders as well thinking maybe they could be catching up. Let's take a look as well what's happening, because we've just had the Singapore MAS coming out. They have kept their currency settings in place. They've maintained the slope, the width and the centre of the currency band. That was sort of the expectation. They're also talking about where they see core inflation heading over this year. They're still seeing that at 0.5%. They are saying, though, that that is subject to some risks. They're also taking a look at other factors as well. Inflation, for instance, could be lower if growth becomes more hesitant, and that was sort of one of the risks, that we could have seen some sort of change to the currency band today to try and offset any slowing growth. But as we said, they have kept their slope, their width and their centre of their currency band in place. Just as well to note, we've had those GDP figures coming out, and they've actually done better than what economists had been expecting. So third quarter GDP rising 2.9%. The estimate had been for 2% growth, Paul, instead for the third quarter.
All right, let's get back to events here at the Citi conference in Sydney. Joining us exclusively now at the investment conference, James Aitken, founder of macroeconomic consultancy Aitken Advisors. James, thanks so much for joining us this year.
Great to be here, Paul.
The last few days have really been fascinating, and it's perfect timing to have you walk us through it, because it's just given us another example of how markets can be so suddenly upended by rhetoric and changes in trade policy. And we've also seen a re-emphasis of the so-called taco trade. Trump always chickens out, but you're warning us another acronym to be careful of, and that's the FAFO trade. I can't spell that one out on live TV, but you can look it up. Do people need to be careful? Can you always rely on that taco trade?
Yeah, I think that's a great place to start. I mean, look, we've had a bit of FAFO, we've had a lot of taco, and certainly, let's be clear, the market is betting once again that this is another taco episode. I'm not so sure, but before we think about the path ahead, let's think about the conditions that prevailed as recently as the middle of last week. So unsurprisingly, people were all in. Systematic investors were all in. Everyone was all in and levered long equities, which makes a lot of sense. It's the right thing to do. But Wednesday last week, per the Bloomberg terminal, 10-day realised correlation on the S&P 500 fell to zero, which is about as low as it can go. 10-day implied correlation on the S&P 500 fell to about 5 or 6, which is as low as it has been. And the point I'd make is that the initial conditions ahead of Thursday, Friday last week were already very stretched. It didn't particularly matter what might come up to disrupt that, but we were primed for some kind of disruption. And of course it got knocked over by a resumption of the rare earths contest, which is what it is. And look, I know it sounds a little bit dramatic, but we have been in a rare earths Cold War now for a long, long time. It's just that it's only burst to the surface, and what we're seeing of late is a taste of what's to come.
How do you see this situation evolving? Because we heard from JP Morgan today, it's going to funnel another $1.5 trillion into that rare earth sector, and Jamie Dimon saying, look, this isn't charity, this is just a sensible move. So is this an opportunity here, or is it more, as you sort of referred to with the FAFO, chance for damage limitation?
Let's differentiate. Markets want to bet that there's a dip, you buy, the party resumes. Okay, that's a path. But what we're actually seeing, and whisper it, is that everything is being subjugated to national security, which I'd argue is long overdue. So all this debate which you've talked about inflation targets, spend independence, look, if it's all about national security, which I think it should be, then everything is subjugated by that. So inflation targets are important, but we've got a whole bunch of investments we need to make ourselves more resilient across the West, more resilient even, and that's barely started. So yes, it's an opportunity for all sorts of investors to participate in, let's call it a national security rebuild. It's long overdue. It starts first and foremost with critical minerals and rare earths, and Australia has plenty of those, but it's more broader than that. It expands the supply chains, and I think what Jamie Dimon announced yesterday is commendable in the extreme, and I think it's a taste of what's to come.
Now, you mentioned a moment ago a number of S&P metrics that suggested what happened was predictable. However, the only metric that really matters to investors is, well, we saw it again this morning, the S&P hitting a level that we haven't seen since May. So that rally just keeps on rolling on. But are you seeing any warning signs longer term that could come undone? Because typically the only thing that would stop it is a recession, but is there anything else you're watching?
Now, you're right. At a headline level, happy clappy, let's muddle through, let's continue to play the game. Absolutely right, and that's the implied bet of the markets. But you dig beneath the surface or under the hood and you see absolute turmoil. We've just had one of the biggest factor smash-ups in a long, long time. Shades of the GameStop debacle in 2021. So on the surface it looks serene and calm and the game rumbles on, but under the surface it's been massively disruptive. And unsurprisingly, any time correlations rise and realised volatility rises, that's very difficult for the leverage market participant. And regrettably, there was an awful lot of damage across an awful lot of risk-taking silos on Friday. And again, as much as the sentiment is, let's put the party back on, up we go again, I think risk appetite is going to be fairly subdued for a little while to come.
How much confidence do you have in this AI rally? Because that is something, and I just noticed your eyes widened there. We have Broadcom signing a deal with OpenAI today. Very exciting. OpenAI doesn't make a profit. Do you see in shades of .com?
When you're out there buying a lot of things and you don't have money, you have to be creative. So hats off to OpenAI and their team for being very creative financial engineers. What else are they going to do? But Paul, to go back to first principles and to put my plumbing hat or helmet, I guess, back on, look, what's the collateral that underlines the AI boom? Is it data centers? Is it cross-shareholdings? Is it all these things that people are rightly a bit curious and concerned about? It's actually GPUs. It's actually GPUs. And the world is short GPUs in the context of the AI CapEx build-out, which is going to continue for some time to come. There are reports that the cost of renting GPUs is going up. And to state the obvious, or remind viewers of the obvious, if you understand the collateral that underwrites any credit or CapEx boom, then you're well on the way to understanding what works and what doesn't. And if the price of the underlying collateral GPUs is steady, people will feel confident leveraging that. And of course, if the rental yield goes up because the world is short of them, people will feel even more confident leveraging those GPUs. So look, I agree with anyone who says it looks a bit fishy or looks a bit odd, but my bet would be that we just keep going.
It feels like a good moment to ask you what the rally in gold prices means to you, and can it continue?
Look, I'd love to give you a really clever answer. Frankly, I don't know. All I can see is walking down Martin Place is people queuing up outside the gold bullion shop. Now, I don't know if they're buyers or sellers, but there's clearly something going on. Look, I'm watching it with interest. I'm watching it in the context of a broader rally in commodities. Historically, if gold did something like this, Paul, you would have said, uh-oh, watch out, the dollar's going to go down as well. But so far as we can see, the dollar's holding in. So I view gold as a special situation. It's interesting in the recent past that implied volatility on gold has started to shoot up as well, which hasn't happened for a while. Maybe suggesting this gold rally is a little bit long in the tooth. But look, to state the obvious, it's very difficult to sell.
Well, of course, gold priced in US dollars as well. And we've seen the US dollar gaining in the Bloomberg Dollar Spot Index about 1.5%, give or take, on month. But considering the trade tension, the rolling government shutdown, Fed easing, ballooning US debt, AI bubble risk, what's driving dollar strength right now, and can it last?
Inertia. What's driving it is inertia. Look, there's two big decisions that global savers, global investors have had to make in 2025 and probably 26 and beyond. It's like, A, what do I do with my underlying US dollar asset exposure, private credit, equities and so forth? And B, what do I do about the dollar? And these large pools of capital can, move money around, but no market offers the capacity that the United States does across a range of instruments. And you remember 10 years ago, the world made a very smart bet. Collectively, the world went overweight unhedged US assets and equities in particular. It worked really, really well, which means the bar to changing that allocation is very high. There was a big test of that in February, March and April, as we all recall. But again, those cumulative gains are so large that there's this inertia that drives strategic asset allocation around the world. So are people nervous, apprehensive? Absolutely. Are there some conversations around town about how should we think about dollar hedging and everything else? Absolutely. But by and large, so good has been the performance of the underlying asset exposure that people have decided that they'd take the option of waiting and seeing. And that, I think, explains a large part of the dollar resilience. So the fast money ducks and weaves through foreign exchange markets. The really big money is just sitting back and watching and enjoying their enormous cumulative rolled-up gains.
All right, James, fascinating conversation. Thank you so much for joining us today. That is James Aitken, founder of Aitken Advisors. And you can stay tuned for more from Citi's Australia and New Zealand Investment Conference. Coming up, the Lowy Institute is going to be joining us that'll later on this hour, in fact, to preview Prime Minister Anthony Albanese's first meeting with President Trump. Bell.
Yeah, Paul, really great interview there. And also we're just keeping an eye on what's happening with Samsung this morning. We're seeing it holding up above 1% so far, but we did actually get its preliminary figures out for the September quarter just in the past hour and a bit, and seeing the biggest profit actually going back to 2022. So it's that big question, that AI theme. Who are the key beneficiaries out of all of this as well? Maybe Samsung is looking more in pole position. But let's bring in Bloomberg Intelligence Senior Industry Analyst Masahiro Wakasugi. And Masahiro, what stands out to you about the numbers that we just got?
Good morning. Yes, the number looks pretty good, and operating profit increased almost 30% year over year based on its preliminary numbers, and also the quarter-over-quarter growth is around 160%. It's so maybe 2.6 times as much as Q2 numbers. So the recovery looks quite great, and maybe the Micron reported good numbers a few weeks ago, and we are also seeing that memory price improvement every week, and so partly the good results may be expected already, but this situation is going maybe continue going forward. So probably the AI or even the conventional DRAM business should be improving going forward. So I think basically the result looks quite good for Samsung Electronics.
Yeah, because we don't get the divisional breakdown until we get the full numbers later this month, but we know that the semiconductor division is making up to 60-70% of profit, and obviously things like HBM are a higher margin for the business as well. So Samsung is a company that's struggled to catch up to SK Hynix on HBM in particular. What does it tell you about that race, and what does it tell us more generally about the question marks over whether this AI boom is starting to look like an AI bubble?
Yes, maybe if we look at the HBM business, actually the market maybe a little bit underestimate Samsung's HBM business. So the Samsung may be lagging behind the SK Hynix and the Micron for the NVIDIA's the most advanced GPU. But excluding that, the Samsung has been quite doing okay for HBM business. So now the HBM business, demand is spreading from NVIDIA to some other companies, including maybe AMD or even the accelerators made by the hyperscalers. So in that sense, probably the HBM demand should be growing in a broader basis. So that should be quite good for Samsung Electronics. And also, I think that probably Samsung is gradually catching up with SK Hynix, even for the most advanced HBM. So maybe we have to see the situation for the 2026, but maybe HBM4 or 4E could be maybe an interesting point to check the progress on Samsung Electronics. And regarding maybe AI bubbles, maybe okay. So regarding the AI bubbles, maybe. Yeah. So if we look at the situation, probably some may think that the demand should be a little bit, skewed to the NVIDIA camps. But as I said, and the demand for the AI should be spreading to the other companies. And I think that basically we have to do more AI analysis going forward, and the AI development should be necessary. So for the robot or maybe autonomous driving or maybe humanoid robot situation. So I think that the AI development should be necessary going forward. So I think that demand should be growing going forward to AI.
That was our Bloomberg Intelligence senior industry analyst Masahiro Wakasugi there. And let's just take you back as well to some live pictures, because we're seeing SpaceX, the Starship, returning through the Earth's atmosphere on its way back for landing. Earlier, we saw the Super Heavy separating from the Starship spacecraft and also splashing down in the Gulf of Mexico. But that is some live pictures there as we see Starship returning through the Earth's atmosphere. More ahead. This is Bloomberg. Taking a look at Japan assets nearly 20 minutes into the cash session for equities, and we're seeing the Nikkei off 1%, but maybe doing a little bit better than could have been expected. Let's bring in our let's cross to Tokyo rather, and bring in our Japan stocks reporter Alice French. So Alice, what do you make so far of the moves we're seeing?
Yeah, morning. As you say, I think it certainly could have been worse, but we are seeing a lot of weakness across pretty much all sectors this morning, which is not a surprise, really. Obviously, Komeito leaving the ruling coalition on Friday has been, I think, quite a negative surprise for quite a lot of investors. It obviously throws up a lot more concerns about political instability. We know that stocks had a pretty decent week here last week after Takaichi's victory as the ruling LDP leader. Lots of expectations of her kind of pro-stimulus policies, pushing up things like tech and defense and infrastructure. We're seeing pretty much all of those sectors weak this morning. It'll be interesting to see kind of how much they really go down throughout the day. But yeah, it seems like risk sentiment is quite a lot lower this morning as we perhaps expected.
Yeah, and I'm just taking a look, for instance, at the bank sector, and you're seeing that underperforming the broader benchmark this morning, down 1.6%. So which sectors are you watching in particular, and how as well are investors going to be rethinking around the outlook for the BOJ in particular?
Yeah, banks are a really interesting one, like you say. They did badly last week because, people were expecting that Takaichi has a slightly more dovish monetary policy stance, and they seem to be doing worse this morning as well, because people obviously perhaps expecting that these jitters around the domestic political setup might make it harder for the BOJ to make that hike move later this month. So I think investors will be watching very carefully for kind of any comments that come out of the BOJ, any comments that come out of either, Takaichi or Tamaki, who's the other kind of potential candidate for the PM position. Exporters as well, of course, is something that we'll be watching because we know there's obviously tensions around trade again with that US-China fallout over the weekend. They seem to be pretty weak. We've seen Toyota down over 2% already this morning. Of course, things like defense as well, which Takaichi is big on, may kind of have a weaker week this week because, you know, if it looks less likely that she's actually going to get the top spot. It will be difficult to kind of position oneself, I think, going into this BOJ meeting because there had been some quite high expectations of a rate hike this month before the kind of Takaichi victory. That's all sort of just been thrown under the bus now, and I think a lot will depend on what happens this week with the domestic politics. So we'll definitely be watching how that all plays out and keep an eye on the bank sector.
Yeah, that was certainly a big question. I mean, you've got domestic politics, you've got US-China trade tensions as well, and any signs of easing we see that could be playing into the dynamic. That was our Japan stock reporter, Alice French, there in Tokyo. And let's get more on those geopolitical tensions now because we've got the US keeping the door open for talks with China, again, over these renewed trade tensions. But our Treasury Secretary, Scott Bessent, says he still expects Presidents Trump and Xi to meet. That's despite Beijing's move to tighten rare earth exports and Trump's threat of higher tariffs in response. Let's get more with our Greater China Senior Executive Editor, John Liu, joining us this morning in Hong Kong. So, John, what are the expectations here around whether this meeting is going to be going ahead?
I mean, all signs point to a meeting happening at the end of this month in Korea when we have the APEC summit. It's important because I think the big question in markets today is, were the rare earths controls that China put in place and the 100% additional tariffs that President Trump announced, was that posturing by both sides to get a better deal, or was that a sign that this relationship is falling apart and whatever truths that might have been struck over the last couple of months is unraveling?
But it's interesting because, yeah, rare earths and that being a bargaining chip, we had Trump and the taco trade really coming in because you saw that de-escalation maybe a lot more from the US side because there was a lot more talk. But Beijing, it tends to be a little, I guess, more reserved and quieter as well. So do we get any insights on how they're approaching this meeting and what they're going to be taking as well in terms of their posture?
I think it's important to note that after the rare earths move and after the additional 100% tariffs announced by President Trump, there was not more tit for tat that came after that. So we've kind of paused. And I think it was important that Secretary Bessent also said in that interview overnight that there's a Chinese delegation in Washington, D.C. this week for the IMF World Bank meetings, and they will be having what he described as working level meetings while that delegation is in Washington. And then Secretary Bessent also said that he expects to meet with his counterpart, the Vice Premier He Lifeng, in Asia before Presidents Xi and Trump meet at APEC. So I think those are 2 points where we're going to get a lot of insight in terms of the direction of travel for the relationship and what potentially we could expect in terms of outcomes. You
take a look at the trade data and exports, and we can see that China's been managing to find new markets and new places to send its goods as well. What's the need for both sides to strike a deal or to continue talking, and who needs it more, do you think, essentially?
Well, I think the strong trade numbers that China has had, the ones that we got yesterday, that I think in the short term would give Beijing confidence to go ahead and push for as good a deal as they can get. It would give Beijing confidence that it can stand the economic pain that might come with a long, drawn-out negotiations. But I think it's also important to note that China's on pace for like a 1 trillion, 1.5, 1.8 trillion trade surplus this year. That's not a sustainable path. It's going to cause friction with other markets. It's going to cause friction with the European Union. We're already starting to see that. It'll cause friction with Latin America, with Africa. And so that longer term, both sides need a deal.
But I like that you use the word confidence because that's certainly something that Washington's grappling with at China that's a lot more confident this time than they were in Trump 1.0. But that was our Greater China Senior Executive Editor, John Liu, there, and we'll have more ahead on the Asia trade. This is Bloomberg. Taking a a look at how European futures are coming online this morning, and you're seeing some upside. We did actually see stocks rebounding in Europe from Friday's losses, and that was as President Trump indicated a trade deal with China was still possible. So we saw the Stoxx Euro 600 index climbing 4.4% into the close. Again, you do see that holding so far in the session this morning, but more ahead. This is Bloomberg.
Let's get you back to SpaceX. This is Starship Test 11. We are just about to witness the flip maneuver and the landing burn of the upper section of Starship. And there you can see it looks like a success so far. It's the ship hovering above the surface of the ocean as intended. It appears every milestone has been ticked off on this test, including that splashdown that you've just witnessed, a successful re-entry, successful deployment of the dummy satellites as well. And even though we see an explosion there, Bell, all part of the plan.
Yeah, it does seem that SpaceX has actually been able to match the successes of its last space flight in August. This has been a really pivotal test for Starship and for SpaceX overall, because it has been facing perhaps some criticism over the timeline and its capability to take people to the moon by 2027. Of course, that seems to be more of a flexible timeline, but we're taking you into the mission control as well, and you can certainly see the cheers there of people in attendance. But let's take a look at what's happening in Asia markets as well, because overnight the really big theme was buy the dip, and is that really translating into Asia today? Certainly for the Kospi, you can see they're climbing 1.8%. Again, chips were the big focus on the US session. We saw the Nasdaq, for instance, climbing, the SOX index, a very strong session, Broadcom rallying after a deal with OpenAI, and today you've got in the Kospi, you've got the Samsung earnings as well that was strong. But the Nikkei still under pressure, coming back from a long weekend break, and then you've also got the ASX 200 a bit under pressure. Let's stick with the Australia theme, because we just had the RBA meeting minutes breaking for the month of September. What we're hearing from the RBA, what they've announced from those meeting minutes, is that they believe it's appropriate for the board to stay cautious, data dependent, and also the information since the last meeting implied no need for an immediate cut. They're still thinking that they need more time to see the full effect of easing flows through the economy, and the extent of policy restriction is difficult to determine. So just some of the headlines we've got so far from those minutes of the September meeting for the RBA. Also, we've just had the NAB business confidence figures coming out as well in the last few minutes. And what we see for the September reading is that business confidence rose to 7. This is according to NAB's survey, and also that business conditions are unchanged at 8, again, according to that survey. But let's also shift tack to what's going to be a very strong debut today, or what looks to be set to be a strong debut. LG Electronics, India, looking like it could see a pop at the open in Mumbai later. That's after the IPO became the most oversubscribed offering of its kind in 17 years. Shares are reportedly trading about 30% above the offering price on the grey market. Let's bring in Lianting Tu, Bloomberg's managing editor for Asia Equities, for more. So, Lianting, does this tell you that it was priced appropriately, or was some money perhaps left on the table? Why is that subscription and that demand looking so strong?
Yeah, it is definitely, it definitely has much to do with the pricing. LG actually had a difficult journey coming to the public market. Its valuation was cut, I believe, at least 2 times in the last 1 year because of negotiations between the investors and the company. So now, with the current pricing, according to BI, it is actually offering a 40% discount to India's home appliance peers. So all that would mean that, yes, they did leave some money on the table, and that's why in the grey market it is trading at about 30% above the IPO price. So yes, we expect a pop and expect it to do much better than its peer Tata Capital, which debuted yesterday and ended the day just up 1%. Yeah, so I think overall LG's domestically sort of well-recognized brand is also playing a big role. The subscription saw a lot of retail investors and wealthy investors going to buy this issuance.
So some encouraging signs there. What are the implications for other future IPOs?
Yeah, Right. So India is experiencing quite a boom right now in the IPO market. October is shaping up to be a record year in India's IPO market. And a few big ones are still very much in the pipeline. So if LG does well, it definitely bodes well for the rest. A few big ones we're looking at, including eyewear retailer Lenskart and India's largest online broker Grow, and also ICICI Prudential Mutual Fund. All these deals are expecting to raise more than $1 billion. And after October, we're still expecting to see $7 to $8 billion worth of IPOs in India, which will take the overall proceeds this year to a new record after a record year last year. And this really shows the deep liquidity pool locally because foreigners have been dumping India's stocks. We're seeing a record sort of exit year for foreigners. And this basically means we're seeing more sway from local funds on decisions on IPO pricing, and overall the deeper liquidity pool definitely bodes well for more deals to come.
Liang Ting, thanks very much for your time. That was a Bloomberg Managing Editor for Asia Equities, Liang Ting too there, and some other corporate stories we're tracking this morning. JP Morgan plans to funnel $1.5 trillion over the next decade into industries that strengthen U.S. economic security, from defence and energy tech to rare earth minerals. CEO Jamie Dimon says the move is 100% commercial and not philanthropy. The initiative will involve JP Morgan's asset and wealth management arm, which oversees client investments. Broadcom shares jumped 10% as it became the latest chipmaker to forge a blockbuster data center deal with OpenAI. The partnership aims to add 10 gigawatts of capacity by 2029 and allows OpenAI to tailor the chips to meet specific needs. No details were given on how OpenAI will pay for the custom chips and networking equipment. Patrick James has resigned as CEO of bankrupt auto parts supplier First Brands Group. It leaves the work of untangling the company's complex and opaque finances to Charles Moore. He's a restructuring expert hired last month during rushed negotiations between the company and its top Wall Street creditors. We'll have more ahead on the Asia trade. This is Bloomberg.
Australian Prime Minister Anthony Albanese will finally meet President Trump next week, and this is after months of delays. And these talks come amid tensions, of course, over the AUKUS Defence Pact, climate policy and Australia's support for Palestinian statehood. So let's get more on what's at stake for that meeting with Sam Roggeveen, the International Security Program Director at the Lowy Institute. Sam, thanks so much for joining us here. Just ahead of this Albanese-Trump meeting, been a long time coming, you might want to comment on that, but in terms of the tone, is it going to be a reality check, a reset, or just a reassurance?
Actually, that's pretty hard to read. I mean, the centrepiece here, I think, from the Australian perspective, will be the AUKUS agreement and the Pentagon review that's been announced. There is speculation that the results of that review are going to be made known to us in the lead up to the visit, but actually even that is speculative. There's been very few leaks about the content of that review and where it's going to come down. Interestingly, the American Secretary of State, Marco Rubio, made a statement to the media a little while ago saying that this all looks positive for Australia and that the review is going to endorse the basic outline of the AUKUS agreement that was struck under the Biden administration. I'd say back here amongst defence observers there is some scepticism about that, in the sense that even if rhetorically the Americans say, yes, we're going to deliver those submarines, whether they can actually make good on that promise is really open to question. I'd say the overwhelming sentiment among defence observers here is that the American defence industrial capacity is simply not strong enough to deliver what they are promising, and also to deliver the submarines that they've promised to their own navy.
Yeah, well, the UK Prime Minister Sir Keir Starmer has been optimistic about the future of AUKUS as well, but more broadly, based on the past few months, this review as well, do you feel the Trump administration's second go-around has its approach to alliances been different from the first term?
Certainly Trump's own instincts are no different. So he's carried around a few sort of core beliefs throughout his public life. One of those is that allies are essentially exploiting the United States. He voiced that sentiment multiple times in his first term. In this second term, he's done it again. The difference is that there are fewer institutional barriers to that sentiment within the US system. He has packed his administration with like-minded people. And so the barriers to him making good on those kind of beliefs are fewer. The interesting thing from Australia's point of view is that we have kind of been exempted from that. In the first term, we were never on the receiving end of some of his verbal barbs about alliances. And so far, so good in the second term as well. Things, of course, could go desperately off the rails in this upcoming meeting. I mean, it's a high-stakes environment if ever there was one. It could be on the one hand a Zelensky-type situation that he faced in the Oval Office with that very public disagreement and meltdown, even, you could call it. Or it could be a perfectly cordial meeting where the two sides agree warmly with each other, and the terms of the AUKUS agreement are fully reinforced. It's a measure of how unpredictable the environment is in Washington that both of those possibilities seem likely and cannot be in any way ruled out. Yeah,
because of course beyond AUKUS there are a few other interesting things to discuss as well, not the least of which the trade relationship. I mean, there is an element of surprise here in Australia that the country got hit with tariffs despite the US running a rare trade surplus. But also this notion of rare earth, and we've seen reported in local media the possibility of a deal here between the US and Australia. How significant would that be?
Yeah, I mean, the reporting's very preliminary, so it's very difficult to make judgments on exactly what Australia is proposing. Nothing that Australia can do, it seems to me, from my understanding of the industry, is going to break that stranglehold that China has on the production of these materials and its control of the market. So at the moment, this feels slightly marginal to the main game here. What I'm also a little wary of is the sense in Australian policy that we are really at under the leadership of the United States, backing away slightly from the open economic principles that have served Australia so well since the 1980s, really. And included in that, of course, is strong advocacy and strong support for open trading and open borders to trade. That has been incredibly beneficial to Australia. Specific deals we do with the United States on rare earths, I think, are an indicator that our allegiance to those kind of principles is starting to erode. I think that's altogether a bad sign for Australia.
Of course, Australia's biggest trading partner is China. So Anthony Albanese's got the same balancing act as his predecessors in terms of balancing the relationship with China with the US. What's the report card so far, and what are the risks ahead?
Well, I think the really good news for Australia is that relationship since the change of government in Australia in 2022 has improved markedly. And the reason that's good news, I don't give overwhelming credit to the Albanese government for that change, but I would give credit to Australian governments of both persuasions, because we underwent a 3-year campaign of economic coercion from China that ended in 2022, and I think it ended because both sides of politics stood firm. We didn't retaliate against China, but we stood firm and said we are not changing our policy because of this economic coercion campaign. And I think after a time, China basically realised it wasn't going to get Australia to make major policy changes under duress. And so we set an important precedent and establish an important principle in our relations with China that we are still benefiting from today.
Well, we had an example of that just recently as well, with Australia signing a security deal with Papua New Guinea. What message is Canberra sending here to China about regional partnerships and influence?
Look, I think it's very difficult for Australian governments to talk openly about pure power politics in the Pacific Islands because that does offend regional sensibilities in the Pacific. But I think that's what this is. At the core of it is power politics. Australia wants to establish itself as the leading power in our region, in the Pacific Islands region, and this is an attempt, and I think a very important signal to China that Australia is the leading regional security partner, not just for PNG, but for other Pacific Island countries as well, and that if China wants to establish itself as a major alternative to Australia in the region, it's going to have to work much harder. So I think an important statement by Australia and by PNG as well, that Australia is the leading power in this part of the world, and that China's attempts to change that balance of power, which really began, probably in the sort of mid-teens period where they rapidly upped their aid budget in the Pacific Islands region, that Australia has stepped up, again, under both governments, Liberal and Labor, and that China's going to need to do more if it wants to wrest control of the region and of the regional security environment away from Australia and its partners.
All right, Sam, we'll have to leave it there, but thanks so much for your insights today. That is Sam Roggeveen, Program Director of International Security at the Lowy Institute. We have more ahead on the Asia trade and Australia ahead as well. It happens every Tuesday, 11:40 a.m. if you're watching in Sydney, and that is 8:40 a.m. in Hong Kong. Also, you can tune into the Bloomberg Australia podcast, delves into the biggest stories which are shaping the country's role in global business, and you can find that on Apple, Spotify, or Bloomberg.com. We have more ahead on the Asia trade. This is Bloomberg.
Singapore's kept its monetary policy unchanged. That's amid stronger than expected economic growth, despite the risks from the trade war between the US and China. Let's get to our Asia Pacific economy reporter Swati Pandey joining us actually in Singapore for this MAS decision this morning. So Swati, talk us through the move. I mean, it was kind of seems expected that they wouldn't make any changes to the currency settings, but what does it reflect as well in terms of the economic fundamentals?
That's right, Annabelle. No change was expected today from the MAS. Economic growth has proven surprisingly stronger, and the MAS said that as well. So economists were expecting the early estimates for third quarter GDP to be around 2% year on year, and it came in at 2.9%. And on a quarterly basis as well, economic growth was stronger than what economists were expecting. Construction, services, accommodation in particular was what MAS pointed out. With international visitors coming in, those were the sectors that boosted demand, and they are expecting growth to remain resilient. In fact, one interesting thing from the report was they said the downside risks or uncertainty around trade is receding, and I mean we would actually think that's not true. The headlines on trade continue, so for them to say that, I mean, they are obviously watching, they are closely monitoring what's happening with US-China, but so far it looks like, given the trade deals that have been signed, they do feel comfortable with where they are, and they pointed out the demand for AI as well, which is supporting Singapore's growth.
Swati, ahead of this meeting, it wasn't a slam dunk. There were a handful of analysts that thought maybe we would see some easing. What's the threshold for easing now going forward?
It looks like MAS is quite comfortable with the settings right now. So they said they expect inflation to trough in the near term and expect it to average around 0.5% this year and then rise to about 0.5 to 1.5% next year. So it doesn't look like inflation is a concern. Right now, it doesn't look like economic growth is a concern. So probably they are on a prolonged hold. If things change dramatically on the trade front or the economic outlook front later this year or early next year, then they do have that option to move. But right now, they do seem comfortable. They will provide an outlook or forecast, updated forecast on economic growth later this year. So that would give us an idea of where the economy is expected to go from their perspective. But right now, it looks like a prolonged hold.
That was our Asia-Pacific economy reporter, Swati Pandey, there from Singapore, with the details on that MAS decision earlier today. Let's also take a look at what's happening across the Treasury curve this morning, because yesterday we had Treasury markets shut globally for a holiday, but we were facing that prospect of steepening across the curve. In terms of the market dynamics today, we're really also getting that trading reaction to President Trump's administration signalling openness to a deal with China. So it is sort of having a bearing on what's expected in the bond market as well. S&P 500 futures, I mean, you can see they're continuing to just move a bit higher. We had the best day going back to May of this year off this pullback a little bit in the US-China relationship, and also taking a look there at oil pool that's rising.
Yeah, let's take a look now at the top geopolitical developments that we're following. An Indian trade delegation is set to visit the United States this week as the two nations work towards finalizing a deal. An official told reporters that New Delhi is also seeking to purchase more natural gas from the US as part of the trade talks. Negotiations resumed last month after President Trump imposed 50% tariffs on Indian imports. That's the highest rate in Asia. South Korea is reviewing a new proposal from Washington linked to its $350 billion investment pledge in the U.S. Delivering the investment has become a key obstacle to finalizing a trade deal reached in July. Foreign Minister Cho Hyun says Seoul aims to make progress by the APEC summit at the end of this month, where President Lee Jae-myung is expected to meet with Donald Trump. And President Trump is pressing world leaders to ensure the US-led truce between Israel and Hamas turns into a lasting peace. Speaking in Egypt at a summit on Gaza's future, Trump hailed the agreement as a new beginning for the region. Despite the hostage and prisoner transfers by Hamas and Israel, key details do remain uncertain, including plans for disarmament, governance, and rebuilding the territory.
Pleased to announce that numerous countries of great wealth and power and dignity have come forward to me, and just today and over the last week, to say they want to help in the reconstruction of Gaza, putting up whatever money is necessary. And the money is, of course, it's a lot of money, but it's not much compared to the value or the wealth of these tremendous countries.
Let's take a quick look at how commodities are tracking. Silver shining bright at the moment, hovering around levels that we've not seen since the 1980s when the Hunt brothers tried to corner the market. Now we've got spot silver climbing above $52 an ounce. Gold also hitting a fresh record, 4,112 right now. Bell.
Yeah, also taking a look at some of the sectors to track at the Open. Taiwan opening in a few minutes from now, and we're certainly going to be keeping a very close watch on what's happening with TSMC in particular. We had OpenAI signing a huge deal with Broadcom overnight, and that lifted general sentiment. Also going to be watching Xiaomi at the Open in Hong Kong as well. Again, we saw shares of Xiaomi really slumping yesterday. There was reports of a fatal crash involving an SU7 electric sedan. So that is it there. Casino is also a big watch with Macau casino data. More ahead.